Let's take a look at some information and charts on Polygon Matic for Brave New Coin. Polygon is a scaling solution, layer 2 solution for Ethereum as well as other chains. It is a bridging technology and it is able to do what ETH cannot and bring fees down. That's really the important part. If it can stay secure and if it can scale, it's an automatic winner because ETH cannot do either of those things. Well, it is secure. I don't want to say ETH isn't secure, but the main issue for me when you're implementing a new technology, an unproven technology, such as Polygon or any other bridge, is can that tech stay as secure as the main chain? Thus far, I don't believe there's been any issues with Polygon. Not to say that there haven't been, but the issue that they're solving here is bringing everything together in a cheap and reliable manner with all sorts of tech. ZK rollups, optimistic rollups, sidechains, Polygon proof of stake, Polygon Plasma, and enterprise chain junk, other stuff, right? It's all bringing that to Ethereum. So it's definitely helping Ethereum directly and indirectly by alleviating those layer 1 transactions on ETH. You know, if I could do what I do on Enzyme using Polygon in a cheap and fast way, like I don't care, right? As long as I can do what I do reliably, secure, and cheap, it's got to be better than ETH at this point because the ETH fees are continuing to be astronomical and unpredictable despite the promises of the EIP 1559 crowd, when the reality is it was all just about fundamentals. You know, ETH's inflation may be deflationary or less than 2% or whatever it is, but that doesn't help the user. The user's footing the bill for massive fees that could have been focused on instead of things like EIP 1559. But that was the quick fix, or framed as a quick fix, to not alleviate gas prices, but to make gas prices less volatile, I believe was the framing. So anyway, back to Polygon. If they can dominate the scalability scene, they're a strong contender for the layer 2 future. And how this breaks down, this is on Masari. It's hybrid proof of stake Plasma. They have staking. They have 2 layers here as well as an SDK. And there have been some audits in the past, but the big thing is staking and layer 2 solutions and cheap. That's really the big things for me. Some fast stats here. The fully diluted market cap is a bit absurd. And here's the proof in the pudding here as far as the fees are concerned. That's all I need to see, you know, as long as it's secure and it's a fraction of ETH fees, let's do it. Let's go. Just implement it everywhere. Everybody, you know, why not? If a dev can implement this, do it. Do it yesterday. Here are the validators for Polygon. Some of these are anonymous, which I'm not a fan of. Some of these are VCs, but in general, it looks like most of them are randoms. I mean, this is like Tezos. Ideally, if you are proof of stake, you don't see a giant list of exchanges. You don't see a giant list of, here's Binance. You don't see a giant list of VCs. You see varied interests, varied people all over the world. That way the network can't be captured by specific people. So when you're measuring degrees of decentralization, this is an important thing to talk about and look at. Now, most people aren't going to care about this stuff until it's a big deal, but it's definitely important to look at this once in a while at the very least. According to staking rewards, participating Matic in proof of stake is 28%. They have an adjusted reward according to staking rewards at 9.3%, which is insane considering what most proof of stake networks are getting. So you're getting this plus, if this is true, if this is correct, you're getting this plus price appreciation. It's a very good deal relative to everything else that's going on in crypto at the moment, which is either neutral, bearish, or just giving you no interest. This is much better than even stablecoin interest. And numbers like this can certainly fuel price activity higher. It's just an incentive to hold, right? It's an incentive to buy and hold this versus virtually anything else at the moment. If we look at the initial ICO or IEO, whatever you want to call it, it's always good to know who has the tokens and when are they being released. So they had a few seed rounds even before the IEO, but in general, nothing too egregious. You know, this isn't like hundreds of millions of dollars. This is a rather modest raise considering what's probably more problematic is the amount of tokens that are held by the foundation and the ecosystem, whatever that means. But only 19% of the total supply was sold in the IEO, 3.8 in the private sale. And if we look at the supply curve, we're currently in the December 2021 area. So there's not much more token to be released. It's currently somewhere around 8 to 9 billion, eventual 10 billion, it looks like. But that will likely eventually hurt price. If it's a raging bull market, supply being released isn't going to matter. But in a bear market, it certainly matters. And if we look at one layer 2 scaling solution that merged with Polygon Hermes, I haven't used this, so I don't know too much about it, but seemingly how it works is that it's able to batch transactions on layer 2 and then sort of confirm them on ETH layer 1, saving the user ideally fees. And if we look at the fee breakdown, 25 cents versus even some of the other solutions, Ethereum at $8 currently. That's just sending ETH from wallet to wallet. That's not anything complex like trading on DEXs, trading on DEX aggregators, stuff like that, where fees for me are oftentimes over $700 per transaction that I do. Just to give you a flavor of some of the costs for this stuff. Just astronomical right now in ETH. TVL for Polygon has kind of sat flat over the past several months, rising slightly here. And more big names are starting to get in on this stuff. Aave, Sushi, Bell, Ren. So the more bridgers can talk to each other and then chains the curve, the better, because that's just cheaper for everybody involved. If like I said, if I can do on Enzyme what I can do on Polygon through Polygon, then let's go. Game on. If you can add to loans or something on Polygon versus ETH, it's going to be much, much cheaper, fractions of a penny oftentimes compared to the cost on ETH. So it's already showing a very strong use case when fees are what they are. If you look at the on-chain stats for Matic, active addresses, basically flat since June, July, but are rising since October. Slowly here, this is from Into the Block. And number of transactions also rising steadily over the past few weeks, but have been essentially flat since July. So price is waking up, on-chain activity is waking up, and the stars are aligning in a way to favor things like Matic that clearly have a use case. Flipping gears to technicals, this is the half-year MA in the green line here, 5 times that in the red, and the midline in the white. And I think the last video I did was September on Matic. And the analysis is going to be the same, but buy zone is below the green, sell zone is in the red. This doesn't guarantee a move to 710. It just says that's the multiplier. And if on backtesting this lines up, which it does, if on backtesting this went to $5 previously, didn't tell you to jump out or didn't align with what's going on, then it's not really reasonable to use it as a forward indicator. But this caught the lows, caught the highs, caught the lows again. This entire July chop fest, September, November. So I wouldn't expect a move to 710. I wouldn't expect a move to 430. But if it gets up to that area, that'd certainly be an area where I'd be selling in the future based on this indicator. And looking at the 200-day moving average VPVR volume RSI, first thing to note, you're getting a volume breakout at a horizontal resistance area. Leading into this, you had an ascending triangle with a series of higher lows on the 200-day moving average. Now it's above all that volume congestion. And you just measure this from high to low. You get a measured move of 320 to 390 if you're being conservative. So this 430 level doesn't look crazy, even using different TA than just MAs. So this already carried a bullish bias, and to see volume actually come through on the horizontal, that's what you need. That's what ETH needed, that's what BTC needed at highs to push this thing past all-time highs. So I do like where this is headed on the USD pair. Cloud obviously loves it. It's above the cloud, bullish TK cross, bullish cloud. Definitely all systems go for bullish continuation on the USD pair. And even on the BTC pair, so I rewatched the video I did in September, and at that time it was threatening a death cross, breaking below the 200, and the death cross never came, and instead it made this inverted head and shoulders mess of a range between 2300 sats and 3k sats. And it's since broken out of that with some volume, harder to see here on Binance, but RSI moving higher. So everything looks good for higher highs here, all-time high retest, and then some, potentially to 8,000 sats, measuring this high to this low. So the inverted head and shoulders and the bullish 5200 cross are already telling you, yeah, this thing's good to go. And if it can get past all-time highs, I like 8k sats. And against ETH, it also has this inverted head and shoulders mess with a breakout at resistance with bullish 5200 cross. So it doesn't really look bearish on any pair. It's still early days. There's still some onboarding and education to be done in regards to what Polygon is and can do. But the technicals are pretty clear, especially when you compare this to pretty much anything else. Matic has done extremely well in the face of all this bearishness. So that's all for this one. Like, comment, share, subscribe, and happy trading.